social investment business is one of the largest, if not the largest, social investor in the UK. We have invested over £320 million over the last 10 years into over 1,200 charities and social enterprises through about 8 different funds. These funds have provided grants and loans to charities and social enterprises. And SIB's new strategy is to look to create new private funds that will take on private investment. And my role at SIB is as business development manager, so I'm trying to create new fund products that social investment business will be able to manage. I'm on a year-long secondment from the Cabinet Office from the social investment team in the Office for Civil Society. And in my role there, one of the things I worked on was the Investment Contract Readiness Fund, which I set up last year. But I also worked on EU structural funds because OCS realized there was a lot of European money that could come to the social sector. And it seemed from the 2007 to 2013 structural funding program that very little money, or not as much as was hoped, had come to the sector. And so I set about looking into ways that more money could come to the social sector as social investment. And two of the kind of ways that I looked at last year for how this could happen were around providing more investment into deprived communities and more investment readiness support. So a provision of investment readiness support in order to help organisations access growth finance, and then that growth finance linked to that investment readiness support, because there's no point in providing the growth finance for organisations that need quite a lot of support if that support isn't there. So I came up with a local impact fund model. Initially, it was supposed to be a kind of national intervention, but as government declared in about November last year that all European monies and future growth fund monies would go through local enterprise partnerships, I had to scale it down into a smaller kind of intervention. And so local impact funds are a local social investment fund product that is supposed to act as a plug-in for local areas, whether that's at a local enterprise partnership level or a local authority or something mirroring the old English regions. So actually, when I refer to local impact funds, it's very similar to what Nick and Melanie referred to earlier on today about regional social investment funds. So local impact funds can help direct investment to local places, and their purpose is to increase jobs and growth in the local area, grow a social economy, and support social entrepreneurship. And we see them as a key mechanism for driving what we call place-based social investment. And if you have time later to come to our stall, we've got some documents around place-based social investment, a prospectus that SIB Group published a couple of weeks ago on how local impact funds could be a key mechanism for growing the local social economy in a sustainable way so that it stays. Local impact funds have 3 key characteristics. The first is that they combine the investment readiness or wider business support in a local area with the growth investment. So the idea is that you need both of these things together for support and investment to work. They try to connect different supplies of finance, whether it's European, national and local, and you can mix and match, hopefully, with local demand. And they should support local economic and public services strategies. So the way I'm beginning to see it now is that you need not just the support for pipeline development and not just the support for growth finance, but you also need to open up markets so that social enterprises have actually money coming into them. So if you have those 3 things together in a local area, you should then be able to support a flourishing social enterprise sector. Social investment business is piloting 2 local impact funds. So I'm working on them now, hoping to launch both of them in December this year. The idea is if we get 2 small funds up and running quickly, we'll be able to show people what they might look like and how they will work, and encourage other areas from next year to consider creating their own local impact funds. And the final point is that local impact funds should build on existing local and national infrastructure and business support. So they should enhance what's already there. It shouldn't be something that comes in and displaces existing activity, but it should be this new mechanism attracts existing activity and aligns it, all for a common purpose. You'll have seen some of these statistics before. This is just the context and rationale for why we're doing this. The key points here are that we know charities and social enterprises are a good thing. They provide a positive difference to the economy and to society. We know that there's a lot of demand for social investment in local areas, and that even while the social investment market is profiled to grow rapidly, that's not going to be enough to meet that demand for investment by social enterprises in local areas. And we know there's a lot of money out there. So Big Society Capital has its £600 million and a mandate to leverage more investment into the social investment market. And we know that the next European structural funding cycle, 2014 to 2020, will have about £6 billion. And that money needs to be matched to about the same amount again. Obviously, not all of that could go to the social sector, but a lot of it could. So what we need are mechanisms for connecting these supplies of money with the demand that we know is there. And that's one of the key challenges that the social investment market is currently trying to take on. Our vision for local impact funds is that they are locally driven, flexible and responsive. I'll come back to this point. While social investment business is looking to pilot too, and we would look to do more if possible, and we are a national organisation based in London, we think it's critical that for us we work in partnership with local players who have local contacts and local knowledge and understand the local market. So that local expertise is absolutely critical for these to work. They should provide a tailored package of support and finance at all stages of a social enterprise's journey, from startup through to sustainability and growth. So this is almost about helping the development of local social economic strategies. Local impact funds should draw into one place a blend of national and local actors and interventions. So the idea, again, is not to displace, but to achieve more through the sum of its parts, building on existing activity. And local impact funds could support socio-economic growth anywhere in the world. I think that in Europe, where they're looking at providing more social investment to social enterprises, something like a local impact fund drawing on European money could be quite interesting to them. But there's no need actually to use European money. It could happen anywhere in the world where people think that a place-based approach to supporting the growth of social entrepreneurship is helpful. This framework diagram shows what I think you need to keep in mind if you want to create a local impact fund. As it's to be a long-term piece of infrastructure to support the growth of the sector, you need to think about sourcing investable propositions. You need to think about supporting them to be able to come to the fund, and then you need to be able to finance them. And so you should think about working in partnership with a lot of local and national players. And so if we look at the two pilot funds that SIB is working on, the Liverpool City Region Impact Fund and the Northamptonshire Impact Fund, in Liverpool, we're working very closely with Social Enterprise Northwest, with whom we would look to access their pipeline of organisations, because they have a business support programme and lots of contacts through providers of support to social enterprises. We look to support them through the local business support programme, but also national interventions like the Investment Contract Readiness Fund, and then we would look to finance them. So in a sense, we're hand-holding the organisation through its growth until it's ready to take on investment. In Northamptonshire, we would look to work with the University of Northampton as our key local partner. They have a social venture builder programme there, and so through that programme, they would look to provide support to social enterprises, which then the local impact fund would look to finance. And obviously, as the model develops and more of these local impact funds are created, you would look to integrate learning and evaluation into what works and carrying it forward in that place and in other locations. So this is a schematic of how the model could work. What you see is different kinds of investors. I've put local enterprise partnership to be confirmed and big society capital to be confirmed, because this is indicative that they might be interested in investing in this kind of thing, but I suppose it would depend on the rigor of the model. National social investors might be interested in investing, and local social investors might also be interested in investing. So, for instance, if the West Midlands or Birmingham or part of the West Midlands wanted to create a West Midlands Impact Fund, for instance, you might want to think about who could fill these different roles. The local impact fund would take on these investments and invest into charities and social enterprises in that local area, and the fund would be very tightly linked to pipeline support programme. And that support might be early stage, investment readiness, it might be capacity building, it might be late-stage investment readiness, but it should look to provide tailored support to charities and social enterprises before they come to the local impact fund. The local impact fund would be different to national social investment funds, because I think what it should probably do is provide smaller and riskier investments, which is really what the market needs, as we saw from the slide that Melanie showed earlier today. So in Liverpool, we're looking at the provision of unsecured loans of under £100,000 to charities and social enterprises. And in Northamptonshire, I suspect we'll do something similar as well. Although each area will be different, and so what kind of finance you provide might be slightly different. And I think it should be very strongly linked in as well with what the market opportunities are. The pipeline support could take on investment from European structural funds. So European Regional Development Fund, ERDF, might be a good source of providing support, so grants, to social enterprises, and that could be matched by local grant makers if they could see that their money could be doubled. Just to put a bit of flesh on this diagram, in Liverpool, we are currently applying for £1 million of European Regional Development Fund money from the existing programme, which we will match with £1 million of our own money, which our board has agreed for us to set aside for this project. That £2 million we would look to take to Big Society Capital to see if they might be investing in this. So a very small fund initially, providing small investments. But if we can show this works, the benefits are, in particular with European money, that they never want the money back if it's an investment. So once that money has been provided and the repayments come back, you have a kind of legacy or an endowment for that local area, which I think is going to be a very strong proposition for any area. So in Liverpool, we're thinking, what could we do after, we're modelling it as a 10-year fund, what could we do after those 10 years with that £1 million once it comes back? It could be a next stage of that fund, it could do different social investment activity. In Northamptonshire, there's no European money in the current programme, and so we are looking at raising investment from local social investors. And we've actually got commitments from 3 investors for £2 million. That's a local institution and 2 local authorities. And again, we've put in £1 million of our own money, which our board has agreed. And that £3 million we package up and see if BSC or other investors might want to come in on that as well. In Northamptonshire, because the 2 local authorities are very keen on this, and because they put so much money as grant support into this social venture builder programme, I think a lot of the activity will be around supporting social enterprises in public service markets. So spin-outs from local authorities looking to procure activity from social enterprises in innovative new ways. In both cases, we know that the Local Enterprise Partnership has written in a local impact fund into next year's European funding programme. So these pilots will be really helpful in terms of encouraging other local investors to get on board, and hopefully to helping other areas understand how they can follow this too. This slide is quite busy, so I'm not going to stand it very long. The point is just that I think you probably need about as much support as you do actual investment in a local area. So if you were to have a £10 million target size for a local impact fund, you probably need to think about the same amount of support in one form or other. And really, you should look at a long-term program of support from startup through to incubation, with capacity building and late-stage investment readiness support as well. So really thinking about how you can provide that joined-up journey of support before an organisation can come to the fund, and that way you'll know and you'll be confident that the organisation is in a strong position to take on that social investment. In most areas, you'll find that a lot of these interventions are already there. So really it's about if you can draw on European funding or other sources of funding to plug the gaps. So where there isn't capacity building support, but there is startup support, maybe that's the gap to be filled. Key milestones for us in terms of taking this project forward are we've already managed to have reference to local impact funds included in the Department for Business's guidance to local enterprise partnerships. Next week we'll start finding out from local enterprise partnerships what their interest is in this. I suspect that between 10 and 20 will say they want a local impact fund, and we'll budget amounts of between £1 and £5 million for that initially. We are looking to launch 2 pilot local impact funds by December, which would look to start investing from next year, 2 10-year funds. The Department for Business will gain European Commission agreement for operational programs. That means for LEPs, local enterprise partnerships, to disperse European money. And we'll have then the clarification on the exact budgets. And then the local enterprise partnerships will procure delivery of local impact funds in their areas where they want it. So we would expect local impact funds to roll out properly from autumn or winter next year. And so there might be between 10 and 20 of these from next year, depending on how the local enterprise partnerships want them set up. Local enterprise partnerships might want to bunch together. So you might have, for instance, 5 of them representing the Old English region actually wanting one fund, or you might see just one local enterprise partnership wanting one fund for its area. So it's just a little bit more information on Liverpool. Key points, I think, have already been made. This is a partnership between ourselves and Social Enterprise Northwest. We would look for a maximum £4 million fund, initially investing over 18 months, but a 10-year fund. It would draw on ERDF investment, European Regional Development Fund investment from the existing programme, building on an existing business support programme of £7 million, being run by Social Enterprise Northwest. So that partnership is very important to us. In Northamptonshire, partnership with University of Northampton, also working very closely with Unlimited, the Foundation for Social Entrepreneurs. They're very keen to support the development of what they refer to as ecosystems of support for social entrepreneurship. So they see investment readiness as a key part of that. And so they can help local areas design that pipeline or that program of support. We would look for a maximum fund size of £6 million in that area. We already have some local commitment for investment. It will be very closely linked in with that service transformation agenda that the local authorities are keen on. And again, with both funds, we would look to see if Big Society Capital might be interested in investing in them, as they seem to be similar to this idea of regional funds.